Hi guys. So this is going to be a video series on swing trading. So I have divided the swing trading topic into 5 subparts. In the first part, this one. I'll be explaining what is swing trading. We'll be covering up some basics of swing trading as well. In the second part, I'll be taking up support and resistance with respect to swing trading. In third part, we'll be covering up instrument selection, that is which is the best instrument to trade when you're practicing this swing trading techniques. Part 4 will be about a top-down approach. This is something I'll be covering up in great detail ahead. And part 5 will be about swing trading strategies. Now this part 5 will be subdivided into a few parts because all strategies cannot be covered in one part, right? So this series is focused on what to trade, when to trade, and how to trade it. So let's get started.
In this channel, we talk about trading, investing, and market analysis to help you become a better investor and trader. So if you are new here, consider subscribing.
So learning objectives of this first part are as follows. So I'll be taking you through some basics of swing trading. Then I'll be doing a comparison between swing trading, positional trading, and the buy and hold approach. Then I'll be moving on to trading instruments that are available when we are trying to swing trade. The next point that I'll be covering is how swing trading fits in overall market strategy of a full-time trader. Then I'll be taking up whether you should adopt a system-based swing trading technique, or you should go in for a discretionary trading approach. Then there are two distinctive swing trading approach that a trader can take. One is the top-down approach and the bottom-up approach. I'll be telling you why the top-down approach is the more preferred method to swing trade. And in the end, I'll be talking about trading platform, tools, and your broker selection. So this part is focused on the very basics of swing trading. I do understand that not everybody is proficient with trading and investing as a topic. So which is why I'm deliberately making an attempt to start with the very basics and then build on to advanced concepts. So I'll just answer this basic question: what is swing trading? So swing trading is basically a short-term trading method that you can apply to stock futures and options. In swing trading, what you do is you take on positions and you kind of keep it for about 2 days to few weeks. This also depends on preference of a trader. Most of the traders actually trade for a period of 2 days to 20 days or 10 days. That again depends on your psychological makeup as a trader. So most of the times the trades taken in swing trade are based on technical analysis concepts. But again, this is not limited to technical analysis only. In case you are following fundamental analysis very closely, so some of the concepts like earning projections or earnings estimate, these kind of triggers can be used for trade entries as well. But this would be more specific around earning seasons or major stock events. So I'll just cover up a basic difference of what is swing trading, positional trading, and buy and hold approach. Now, buy and hold is more applicable to investments, but I have seen in markets that there are traders out there who like to buy stocks and kind of hold them from a trading perspective also. So which is why I've kept this buy and hold approach in sort of a trading topic as well. So in swing trading, as I've said, it's a short-term method, and the position holding period ranges from 2 days to about few weeks. Positional trading, again, it's sort of a medium-term method. It's not a short-term method, and the time duration for a trade typically ranges between a few weeks to few months. And buy and hold approach, obviously I told you, it's like a trader is taking up a position and keeping that position for a period of 1 year or few years. Now this happens as well because now mostly if you buy a stock for 1 year or more, that itself categorizes as an investment. But there are some traders out there in the market who like to keep their investment portfolio separate and like to keep their trading portfolio separate. And in that trading portfolio, they kind of want to hold positions for 1 or 2 years as well. So on this chart, I'll just show you what is swing trading. So this is about swing trading, right? So these swings that you're seeing, this on the way up, this on the way down, again this is on the way down, this one is again on the way down. So these swings that you're seeing, these are actually categorized as swing trading because you're trying to capture this swing or this one, right? Now if you see this particular movement, this cannot be categorized as a swing because there are some sort of retracements happening on the upside and the downside. Right? So basically a swing is where you can clearly mark out a pivot and price either falls or rises from there. So that is the job of a swing trader. His aim is to capture the most relevant swing that is likely to happen, right? So positional trading is sort of different because a trader is more bothered about the larger price movement here. So in this particular case, that price movement would be from July to October 2015. And in this case, it would be from April 2016 to about April 2017. And in this particular case, it would be about April 27 to January 2018. So these are the kind of moves that a positional trader prefers, because he likes to get into positions and he kind of holds on to that positions for a period of, let's say, few months, right? So the buy and hold technique is, hypothetically, if you're holding a position here, even if the price falls about 50%, you still, kind of hold that position, and you don't kind of exit on every downturn as such, and you keep on holding that position till the, relevant conditions prevail. So this sort of technique actually requires a lot of patience, and it's a completely different topic, which is why I won't go there. But swing trading and positional trading concepts are more or less the same, except for the fact that time duration of trade is much shorter in swing trading, whereas in positional trading it is much longer. So we'll just come to the trading instruments aspect, which trading instruments are available for swing trading. Before heading forward, I would just tell you that this part is a sort of theoretical part, because this will actually form the building blocks for part 2, 3, 4 and 5. I don't think I would end at part 5, because this is an extremely vast subject, and I think as of now I've just planned for 5 parts, but I think it would easily extend up to 10 parts. So which is why this part 1 is extremely crucial, because you need to get your basics right in order to understand what is going to be taught in part 2, 3, 4, 5 and so on and so forth. So the trading instruments that are available for swing trading, they kind of depend on market conditions and the trend direction and the volatility conditions. Now these 3 specific aspects I'll be taking up in detail in remaining parts, that is part 2, 3, 4, 5. But you have to remember that swing trading is sort of a short-term trading method. So which is why instrument selection is absolutely crucial here. The 3 most popular instruments that we have available are stocks, futures and options. Now in case you're a beginner or you're trying to learn how to trade, I would tell you that you should stick to stocks when it comes to swing trading, because risk management and position sizing is much easier in stocks, and this should be your most preferred instrument. In fact, my personal preference is always to stick with stocks as far as swing trading is concerned. So futures is the most popular instrument, because at a very small margin you can actually build up pretty large positions, but it is actually also one of the instruments that leads to huge capital destruction. So which is why I categorize this instrument as risk to reward is not that great in this futures instrument, especially for beginners, because it's kind of difficult to manage risk in futures. Options is actually the most rewarding instrument, but the experience level required to manage a trade in options is quite high. It is more rewarding in terms of risk to reward, and there is a limited capital that you can lose, especially if you're buying options. But again, I would still say that in case you're starting out, or even you're 2-3 years sort of you have experience in the market, still try and stick to stocks before you graduate to the next level. So in terms of moving up to the next level, I would say that first start with stocks, then move to futures, and then finally try your hand on options, right? Because in my opinion, options are one of the most trickiest instrument to trade, whether from positional perspective or swing trading perspective. I'm an options trader as well, so I trade these instruments quite frequently, which is why out of experience I'm telling you that trading options is actually pretty difficult. It's actually more lucrative, because most of the brokers and advisors, if I may use the word, they kind of push retail traders to pick up positions in options. But I think you should be away from this instrument for a long time till you master how to trade stocks. Then you need to master how to trade futures, and then you should move on to options. So that is why that is how I prefer for a trader to graduate from one instrument to other. So I'll just come to this aspect, which is swing trading as an overall market strategy. Now, why this is important is because I often see that traders commit a lot of money in swing trading, and they are also not clear about what type of market strategy they should adopt. So, swing trading, in my opinion, should not form 100% of your market strategy, because in market strategy, I'll just show you this chart first. Yeah, so this is the sort of market strategy I follow in trading. So my market strategy comprises of three independent strategies, which is: one is swing trading, the second is positional trading, and third is investments, right? So these three sort of investment and trading techniques actually form my complete market strategy. So this, I would say that this depends on trader, because there will be occasions where a trader would feel that he's just a swing trader. He does not want to invest, or he does not want to trade positionally. That is fine. But in general, if you're starting out, try to classify your market strategy into three subtopics, which is positional trading, swing trading, and long-term investment. Now, in positional trading, you should stick to stocks and futures. In swing trading, you can experiment with stocks, futures, and options. And for long-term investments, there are a lot of options available. That is stocks, bonds, deposits, gold, silver. The list is endless. So if you're starting out, I would say that for positional trading, which is a completely separate topic, and I will cover it up once I finish with swing trading and options trading topic. For positional trading and swing trading, start with stocks first. Don't move to futures and options until and unless you sort of master how to trade stocks. And long-term investments, again, I've covered some bit of this topic in detail, so you can check out the channel for how to select stocks to invest in stock market. So I'll just come to asset allocation when it comes to market strategy. Now, this is the sort of asset allocation that I follow. So I had shown in this previous slide that my market strategy comprises of swing trading, positional trading, and investment. Now, the way I divide my capital is that I allocate about 10% capital to swing trading. Then I allocate about 30% capital to positional trading. And for long-term investments, I allocate 60% of my money, right? So this is the sort of income categories that I have classified based on my, psychological comfort level. So for me, the positional trading that I do is my active income, because I'm a full-time trader. The swing trading that I do is my passive income. That is, my life does not depend on this income. It mostly depends on positional trading. And long-term investments, obviously, you cannot categorize them as income, because they are the sort of long-term returns that you take out of the market. So the modified chart that I showed you, this is the initial chart. So based on capital allocation, this would be my market strategy. That 10% of my money goes into swing trading, about 30% goes into positional trading, and 60% of my money goes into investments, right? So this is how I sort of divide my money when it comes to my overall market strategy. Now, understanding this, especially if you're a beginner, is important. Get into the habit of dividing your money into 3 or 4 segments which you prefer. You can also add one, let's say fixed deposit segment or IPO segment, whatever segment you want to add based again on your comfort level. But get into the habit of allocating your money in terms of the various strategies you're going to apply in market, because not all years will pass by where all these 3 strategies would make you money. It would be that those years are extremely rare when you will make money in positional trading, swing trading, and long-term investment at the same time. So there are times when investments won't do well, only swing trading and positional trading would do well. And then there would be time only when investments would do well, and swing trading and in positional trading you won't make that much money. So which is why it is extremely important to allocate capital to different sort of market strategies. So now I'll come to swing trading when it comes to trading systems or discretionary trading. Now, trading systems is when you sort of take a set of rules and you kind of put them into a computer program, and that program actually gives you entry or exit signals. Now, system trading is something, it's a good thing, especially in India. As of now, you're seeing a lot of brokers providing these backend APIs through which you can sort of build your own trading systems and do kind of automation stuff. You just buy and sell based on whatever triggers are coming out of your trading systems. Now, this is a good thing, but for an old school trader like me, I've always preferred discretionary trading because this is where my own analysis or my own reading of market comes into picture. This ultimately depends on from trader to trader whether he wants to make a swing trading system or whether he wants to practice swing trading based on sort of discretionary approach where he'll be looking at charts, he'll be looking at other indicators and what the broader market is doing, and then taking a call whether he wants to trade in this environment or wants to sit out. Whereas a trading system does not differentiate in any market condition unless and until you have some advanced programming out there which can see into the insights of what is going on in overall market. I think a human mind is only capable of doing that. I don't think various programs or softwares out there are capable enough of sort of replacing the insight that a human mind can have with respect to trading and overall market conditions. So, in my opinion, most of the trading systems actually fail to capitalize on the human element, and that forms a huge part of trading. In case you've been in the market for 1 or 2 years, you would know what I'm talking about. Uh, a trader's intuition, a trader's judgment, or his ability to foresee what is going to happen. I don't think there is any trading system yet that can actually replace these qualities of a trader. So which is why I always prefer a discretionary trading approach where I want to rely on my ability to read the market rather than a system's ability to exit or entry a trade. There's one more point I want to highlight, and that is in discretionary trading your trade management is a lot better because you at times you look at the screen and you know that in case you're long, you know that sudden selling pressure comes into the market. You can immediately, based on your intuitive skills, you can exit that trade. But that does not happen in a trading system, which is why my personal bias is always towards discretionary trading. But I leave it up to you whether you want to follow this approach or you want to prefer something like a automated trading system. That is also fine because there are traders who get wonderful results out of trading system because they remove their emotions out of their participation in the market. So that also works. I'm not saying that does not work, but I personally prefer to be completely involved in trading, and I believe that there is no system out there that can actually replace your ability to read the overall market. So now we come to trading approach. Now as we'll be covering up more and more parts in swing trading, you would see more of this in detail. So there are two sorts of approach that you can follow. One is the top-down approach and another one is the bottom-up approach. Now I have a completely different part for this top-down approach. In top-down approach, what happens is we start with the broader market index, then we move on to sector, and then we kind of pick individual stocks. So this approach is a more holistic approach. In my opinion, you get more high probability trades when you sort of follow this approach rather than bottom up approach where you don't look at index, you don't look at sectors, you simply go to you simply follow stock specific approach and you pick up stocks for swing trading. Now luckily I'm doing this swing trading series in kind of market environment which is not conducive for long trades. There are many stocks that are available for swing trading as of now on the long side. But look what will happen. If you're doing the bottom-up approach, you'll be selecting stocks for a long trade, but the overall context or the overall direction of the market, at least for the short term, has been down and volatile. And which is why I think you will have more whipsaws if you sort of follow bottom-up approach, that is stock specific approach in current market conditions. So I hope my point is clear, which is why if you start with top-down approach, that is you take the trend of index, then you move to trend of sectors, and then you pick out stocks from those sectors in the direction of trend, then I feel the probability of picking out winning trades is more. So personally I practice this top down approach, and that is what I'll be showing you in subsequent parts. So before ending this part, I'll just take up this subject of platform, tools and broker. Now again, I've taken up this very basic topic because traders out there are not familiar with basic concepts, and these things also need to be covered in depth. Now by trading platform I mean technical analysis softwares or a web-based technical chart platform. Now for swing trading I think both of them can work. In case you have a technical software, that's great. You can actually customize your indicators, have a pre-screen ready. Every morning you can get up and directly pick out trades from that software. Web-based system, web-based technical chart platform does have some drawbacks, but in case you don't want to invest in a stock software, then that's completely fine. That does not matter. When it comes to tools, I would still maintain that a proper technical analysis software has more tools and more ability for you to manage or read your analysis well, just because of the amount of or the volume of tools that are available on a proper technical analysis software. You can pick out any software you want. I personally use Ninja Trader, Broker, Market Delta. So it's completely up to you in case you want to. The most important topic that I want to focus on is broker. Now, quite often for swing trading, I think I will encourage you to go out and pick out a discount broker, that is low cost broker, because margins as such are low when it comes to swing trading profits. But do your research properly while picking out a broker. Especially have a different account for positional trading and investment, because have a full-time account or a full-time service brokers are there. Keep your positional trading and investment portfolio with them. As far as swing trading portfolio is concerned, you can maintain that with a low-cost broker. Try and research on the kind of broker you're choosing from, because especially on event heavy days, you do tend to see that these low cost brokers their system freezes, the orders don't go through. So these are the sort of things you need to consider before trying to shortlist a low cost broker. So do your research well. There are a lot of social platforms available where you'll come to know whether on an event day that particular broker his system froze or not. What about his customer service when such things happen? You need to take those things into account as well. Keep a sort of price on your account that you're going to hand over to your broker. Don't think that you have a small account today, which is why you need to compromise on this broker aspect. Today you might be small, but tomorrow you may grow into a very big trader. So which is why always value yourself more, and ask questions to your broker before trying to sign up. Have a demo of his trading platform. See whether his systems are capable enough to handle an event heavy day, and only then you go out and pick out a broker. So I'll just summarize the key points here. So this part was a very basic part that I wanted to do for even beginners who don't know much about swing trading. And if you see in my subsequent videos also, other parts that I'm doing, whether it's Bank Nifty series or Relative Strength series, I'm trying to focus on one thing, that is to start with basics and then build on to advanced concepts. And this is something I will maintain throughout, because I need everyone on same playing field before I can start discussing advanced topics. So in the next part, I'll be covering up support and resistance level, how to determine that in swing trading, because in swing trading, if you can determine support and resistance level accurately, or maybe in a range, then half of your job is done. So again, this is planned for a 5-part series, but I would probably extend to about 10 to 12 parts, because this is a vast topic. And once I reach this strategy section, I know for sure that this would extend to about 10 to 12 parts easily. So that's all for today. In case you have any doubt, do leave a comment below and I'll get back to you as soon as possible. And thanks a lot for watching this video.